Today, the KOSPI and KOSDAQ plunged, with circuit breakers and sidecars happening at unprecedented rates. Let's take a closer look at this now. The Economist in the UK recently called the Korean stock market a casino. Especially for Korean investors, it has truly been a roller coaster journey. The KOSPI index nearly tripled since early 2025, but since last June, it has dropped by about 25%. They also compared individual investors to gamblers and likened the stock market to a casino. In other words, the volatility of the KOSPI is extremely unusual compared to the past. Today, once again, a circuit breaker was triggered on the KOSPI. This is already the 8th time this year. What's even more noteworthy is that, looking at the entire history of our stock market, circuit breakers have only been triggered a total of 14 times, and 8 of those happened just this year. Over half of all historical cases occurred within a few months. A circuit breaker is a market safety device that activates when stock prices drop sharply beyond a certain level to prevent investors from continuing to trade in a state of excessive fear. If the KOSPI drops by 8% or more from the previous day's close and remains there for a minute or more, all stock trading stops for 20 minutes. Single price trading follows before normal trading resumes. This system allows market participants to reassess the situation. The fact that this measure has been triggered 8 times in a single year is a sign of just how repeatedly the market is experiencing major shocks. The difference becomes even clearer when compared to the past. In 2000, it was triggered twice, once in 2001, twice in 2020 during the COVID-19 shock, and only once in 2024. But in 2026, and July isn't even over yet, there have already been 8 occurrences. In just a few months, occurrences have already far exceeded the combined total from all those past years, and sidecar triggers are unusually high. A sidecar is a system that temporarily restricts program trading to prevent further market disruption. Unlike a circuit breaker, it doesn't halt all market trading but is a safety device meant to ease sudden volatility. This year, the sidecar was triggered 66 times on both the KOSPI and KOSDAQ. In 2008, the annual record was 45 times during the financial crisis, but by the end of July this year, that record has already been surpassed. The fact that market safety devices are being triggered, this often means that sharp rises and falls are repeatedly occurring in the market. Right now, the volatility is so severe that people are sarcastically saying it's like a game of chance. One of the main reasons why the KOSPI is fluctuating so much is because Samsung Electronics and SK Hynix have such a large share in the market. Samsung Electronics accounts for 26.68% of the total KOSPI market capitalization, and SK Hynix holds 23.76%. Combined, the two companies make up 50.44%. Out of the hundreds of companies listed on the KOSPI, more than half of the market capitalization is concentrated in these two stocks. Because of this, when both companies' stock prices rise together, the KOSPI usually increases significantly. However, if these two stocks are heavily sold, the index often drops sharply, even if other stocks remain steady. In fact, foreign and institutional investors often focus their trading on the semiconductor sector, so changes in supply and demand for Samsung Electronics and SK Hynix frequently influence the overall market sentiment. Of course, if we look only at the performance of these two companies, there are many investors who have high expectations. With the AR industry growing, predictions suggest these two companies will remain highly profitable. Whenever expectations increased, funds repeatedly concentrated more in these two stocks. Recently, Samsung Electronics, SK Hynix stocks, and related financial products made up over 80% of the Korean stock market's total trading volume on some days. As the market's attention and trading became excessively concentrated on certain stocks, the influence of these two companies' stock price movements on determining the overall direction of the KOSPI has also grown accordingly. KOSPI tends to fluctuate more than other countries' stock markets whenever negative developments abroad or semiconductor concerns arise, and this keeps repeating. Most importantly, leverage on single stocks causes significant harm. The Economist noted strong results from Korean semiconductor companies, making Korea attractive to investors. However, they also highlighted retail investors' aggressive investment habits and the added volatility from leveraged ETFs. There have even been times when more money flowed into leveraged ETFs than into the companies themselves because of leveraged ETFs. However, as market volatility increases, the people who are hit first are retail investors. Investor losses are quickly rising, especially among those using margin trading or leveraged investments. In fact, from May 27 to July 24, during just 40 trading days, the total amount forcibly liquidated reached a cumulative 1.88231 trillion won. This is a notable rise from the 1.03319 trillion won recorded between March 26 and May 26. The rapid rise in forced liquidations by several hundred billion won in just over a month means investors' losses have grown just as fast. Forced liquidation happens when an investor borrows from a securities company to buy stocks, and a price drop causes the collateral value to fall below a set threshold. If the investor doesn't meet the securities company's margin demand within 1 or 2 trading days, the company will sell their stocks regardless of their wishes. The problem is that if these forced sales happen all at once, they can drag the stock price down even further and trigger additional forced sales for other investors. This creates an environment where investor sentiment is bound to deteriorate rapidly. This trend intensified, especially after single stock leveraged ETFs launched. Leverage increases profits when stock prices rise, but in a downturn, losses also grow just as quickly. As volatility increases, the burden on investors rises sharply. Analysis indicates the rapid rise in forced liquidations is linked to the current market environment. Of course, the financial authorities have also recognized the seriousness of the situation and have belatedly begun to respond. They decided to implement the measure of raising the minimum deposit requirement for single-stock leveraged ETFs to 30 million won, which is higher than before, 5 days earlier than previously planned. They also announced that if investment demand continues, they will consider additional regulations such as setting individual investment limits. After these measures were announced, trading value for the 16 single-stock leveraged products dropped about 27% from the previous day. However, just because trading has decreased somewhat doesn't mean that the losses that have already occurred will disappear. There are already quite a few investors who have left the market due to forced liquidation, and it seems that it will take a considerable amount of time for individual investors who have suffered large losses to regain confidence in investing. The recent KOSPI crash can't be explained by domestic factors alone. A new variable has emerged in the global semiconductor market. Changshin Memory, China's top DRAM company, is going public. On the 27th, on its first day on the star market of the Shanghai Stock Exchange, Changshin Memory's IPO price jumped 465.8%. Its market cap reached about 3,280 billion yuan, roughly 712 trillion won, making it the top company by market cap on the Chinese mainland stock market. It overtook the Industrial and Commercial Bank of China, the previous leader. The market reacted so strongly due to multiple factors working together. First of all, expectations for the expansion of AI memory demand were still ongoing, and on the first day of listing, only 6.73% of the total shares were actually available for trading on the market. Institutional subscription ratios topped 500 to 1, and the retail investor subscription ratio reached 244 to 1, leading to a surge of buy orders for the limited shares. Because the star market has no price limits for new stocks on their first 5 trading days, the buying trend was immediately seen in the stock price. Changshin Memory's rapid growth is also notable. Since its establishment in 2016 under the strategic support of the Chinese government, it has focused on developing advanced DRAM processes, and now it has reached the stage of mass-producing the latest memory products such as DDR5 and LPDDR5X. Market research firms report that as of 2025, Changshin Memory has become the world's 4th largest DRAM company, ranking just behind Samsung Electronics, SK Hynix, and Micron. While Samsung Electronics and SK Hynix still lead in market share, China's rapid growth in the memory semiconductor sector is being seen by global investors as a new factor. Also, the Chinese government's full support is significant. Changshin Memory's main shareholders are the National Semiconductor Industry Fund and many local state-owned investors. It has long received tax breaks, financial aid, R&D funding, and talent recruitment policies. Overseas observers see Changshin Memory as crucial to China's semiconductor self-sufficiency, and these changes could affect domestic semiconductor firms. There are still expectations that the AI memory market will continue to grow, but from now on, we also have to take into account the expansion of production capacity and technological competition from Chinese companies. Investors now consider not just Samsung Electronics and SK Hynix's performance, but also China's semiconductor industry growth. Rising uncertainty may increase volatility in domestic semiconductor stocks. Also, the intensifying semiconductor competition between the US and China is another factor. Global investors are closely monitoring how future tech competition and supply growth will impact the market, likely causing ongoing volatility in domestic semiconductor stocks.